Well, the markets went ripping to the upside. We had a couple of buy signals trigger yesterday. One that I was mostly interested in, the other one not so much. And well, the market still took off in a fury. Holy moly, everything was green across the board. And I'm still here sitting on the sidelines before I press too hard on my current long positions and then also adding to my portfolio. I'll give you some more insight into kind of my thought process on today's video. If you are new here, you're watching the Stock Market Brief Show. My name is Michael Silva. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. For those that were here yesterday leaving the kind comments, I appreciate it. Thanks for smashing that thumbs up there too as well and subbing to the channel if you haven't done so already. I'm horrible at giant thumbs, I tell you what. Today's episode is brought to you in partnership with FTX. More on FTX later. Let's go ahead and get into today's show. All right, everybody. Welcome back to the computer. Yes, I'm feeling a lot better today. I still have a little bit of a slur, but I am feeling a lot better. So thanks for all those kind words. So tech, materials, communication, they led the way. Just honestly, across the board, it was rather, poor trading day today, other than just one stock. And that one stock, well, was really NVIDIA for the majority of the day. NVIDIA was up almost 10%, and it was up 10%. I believe intraday and closed just right around the high of day two as well. And then stocks like Apple have been on a monstrous tear. So when I look at stuff like this, the first thing I think is complete squeeze. And eventually these things lose steam, but there's nothing healthy about a market that, or even an equity that runs up, 2% plus every single day, which we have been seeing also in the equity markets. Now, this was the buy signal that was triggered. It has not updated yet, so it is active as of right now, but I'm still giving it time before adding more to my long positions, given the current context of some of these extensions in the market. When I take a look at the dollar was up today. The S&P 500 was up today. Everything seemed to be up. So there's some very weird things going on. And that's why I kind of want to talk to people that might be FOMOing into this and not being patient. You got to think, if this even continues to press up higher, there's going to be a pullback at some point. And to where that is, I don't necessarily know, but I'm still assuming that we'll be getting here a pullback soon. I'm thinking probably either tomorrow or into next week. And the reason why is because we did see a lot of options activity that was very bullish and short dated options in various equities and also the indices here, which you can kind of tell that we've just been seeing this massive squeeze to the upside. Now, the dollar was up today. Oil was down today 2.25%. So also some wild swings taking place there. That move down in oil maybe added to the relief in the markets. I look at the BP charts. They're still overextended. There's the BP SPX. I'm looking at the RSI here. BP NDX still there. And remember, overextended could stay overextended for a long time. And I also look for overextensions and negative divergences. So still overextended. The BP COMPQ is coming off a little bit here, but it is still in that overextended territory or just coming off of it. The Dow Jones Industrial Average also getting up to those levels. If we look at the NYMO, the 90 McClellan Oscillator, market's pressing higher, internals are weakening, giving us a negative divergence. The NASDAQ McClellan Oscillator, market is pressing higher, internals, they're weakening and getting over into an overextension. You can see the negative divergence. Then you have the trend indicator that is on the 10-period moving average. This it's been accurate multiple times. I think 10 out of the last 11, and this one right here, I have yet to see it get proven yet, but as it stands right now, we just went down slightly, and now we're starting to take out that previous high. So this could be a lag factor, or it could be completely ignored, but I'm still keeping that there and keeping an eye on it at this particular point in time. Also to note, the housing was down today too, but yet the S&P 500 continued to press up. So something is very strange going on here right now, and it's very hard to put my finger on it. And I think a lot of people are starting to notice the same thing. And, the reason why I'm kind of being hesitant here is because I don't want people to think that it's going to crash hard. It could. But if you start looking for short positions in a market that's ripping and you're not being very tactical about it, like fading over extension, so if the move moves up significantly, and then you want to fade it quickly, but just understand that price can consolidate and then break out again, just right out of the gates. So you need to be just very careful in shorting. And then if the market wants to continue to stay strong, you can really look for those pullbacks and buy into strength when it starts to pick up. But it wasn't even just like dollar strength, housing weakness. Gold was up tremendously today too. It was up 1.29%. The miners were up too as well. So gold had a big move to the upside. We're just seeing some very interesting intermarket relationships kind of, going back and forth right now. If we take a look at the risk ranges, Qs is pressing up to the upper risk range right now. You can see here just not normal type of behavior in markets to see multiple days of, 1.5, 2 plus 2% to the upside. So we closed yesterday on the low of day. Today we closed on the high of day, and really led by, you can see stocks like Apple as well as even Tesla was just a huge, or not Tesla, NVIDIA was just a huge player. The semiconductors overall were just very, very strong. So if we look at the 15-minute time frame, moving back into that overbought territory, still a negative divergence there. Still above that 5-day moving average, and we're not too far from getting that risk range up ahead there too. But momentum is slowing down if you look at the PMO. So, is this going to get digested? What's it going to look like? Well, just take a look at the history of the chart. We've seen rips. We've seen dips. We've seen rips. We've seen dips. Rips, dip, rip, dip, rip, dip, rip, dip. Okay, so when we see a rip, there's probably going to be a dip at some point. To where? I don't know, but I'm still looking at that volume shelf profile over here, and, I can see it coming down to this area, which is 342, 345. At some point, I couldn't be shocked, but if it doesn't want to give us that, we can also look at that 5-day moving average and play pullbacks intraday there too as well. So you just got to need to be tactical. Currently, SPY, same thing. I was looking for a lower high, lower low, and actually in all the indices the previous day. And we got the lower low here, but then we had also a higher high in the Qs. But in the SPY, we did not actually take out the previous low. We just had a higher high and a higher low. So very weird price action. Once again, we closed on the 200-day moving average. We gapped up, we pulled down a little bit, and then we closed at the high. Just wild, crazy swings. But being that we closed at the high now, one could assume that we can probably reach up a little bit further. The next target would be obviously the upper risk range. So that could mean another higher high, another higher low going into tomorrow, which is we're going to see some options expire, some weekly options expire there. If we look at the 15-minute time frame on the SPY, we did pull back into that 5-day moving average, which can act as a nice area for potentially hedging long. RSI is getting a little bit overbought there, and you can see here, we're kind of just cupping right around here, which could very well propel us up further. So be on the lookout for some more strength. Overall, though, if you just keep an eye on this volume shelf profile, right, and look at the previous moves, up, down, up, down, up, down, up, down, don't be too shocked if we get some sort of a pullback that's quite aggressive. But as it stands right now, it looks like the market just wants to continue to press a little bit further and, maybe scare out some more bears. We'll see what happens. If we take a look at the IWM is rather flat on the week, not much change, but it did end up on the day. It is forming somewhat of a nice little, flag pattern right here. If we take a look at the 15-minute time frame, I'll highlight it a little bit better, but you can see here it's kind of flagging. We're right there at around the 5-day moving average, slightly above it. You have this move to the upside. Maybe that brings us to the upper range too, which means there could be a lot of opportunity for small caps to capture in some games. So tech had its big run, really led by technology. Perhaps we get a move in small caps if the market wants to continue to press up higher. But just take note, right? Volume shelf profile can act like a magnet, right? The point of contact right here, point of control, sorry. We can potentially pull back into that area. So I'm just watching the market as it stands right now, waiting for setups to occur. As it stands right now, it is just a very difficult environment. The market is kind of a little bit all over the place. We have all types of market uncertainty. We have also all these geopolitical risks still at hand. So overall, it's just a crazy market. Before we hop in, signal for Bitcoin, this is one that we did enter into. So, even if you take it slow or, you're waiting for a pullback in the other indices, Bitcoin and crypto gave us an early indication of a buy signal. So if you front ran the signal, congratulations, it's looking good so far. Always be sure to lock in some profits, like if you're awarded some profits, tighten up your stops, reduce your risk, do what's right for you. If you're trying to YOLO into it, then YOLO into it. Do whatever you really want. Me personally, I like tightening up risk, but I already have a strategy in place for this. I buy when it got past this previous week high. Now I'm up on the position. The buy signal is still pointing up. So I just chill. I just wait till the next sell signal. If that means that I'm going to get stopped out or it's going to go down and I'm going to get a loss on the position, I really don't care because my position size is accurate for my portfolio. Now, if we take a look at Bitcoin on the daily time frame, you can see here we're starting to peek our head out right now. It was that expansion. Now we're looking for the contraction. We're starting to look at these moving averages. 50 starting to curl up, 20 starting to curl up. We have the relative strength line between Bitcoin and the S&P 500 here. This is starting to turn up. So, it'd be great to see this start to get some continued strength here. Perhaps go tag that 200-day moving average. We'll see here what happens in the very near future. Ethereum looks like it's poking its head out too. It's already made a very big run from 2,400. Relative strength line is starting to get above that 50-day moving average and is getting back above this trend line here too, right? Expansion leads to contraction. Contraction leads to expansion. All right, everybody, let's just wrap this up all together. So another very strong day in the markets, right? When we just take a look at the SPY, for example, just be mindful of this move. The move is going to get digested. It's going to get consolidated at some point. So be prepared for that. Whether that reaches up to this 200-day, I don't know exactly where this can reach, right? These type of things, they can last for quite some time. But what you don't want to do is end up going long right here, and then it gets all of a sudden a pullback. So if you're entering into like specific equities or specific stocks, be very selective of where you are entering into the position. You don't, when volatility is rather high, I know the VIX came off quite a bit, but it's still above 20. Between that, 20, 25, 30 range, you need to be very, very tactical because volatility can just peek its ugly head up and start spiking back up again. So, like I said, just be very tactical. That's all I got for you on today's episode, everybody. Have a wonderful night.